Eric Fry released a stock teaser where he claimed a certain next-gen stock is going to explode in value in the coming months. But as usual, he won't just tell you the name of this stock. Instead, he wants you to pull out your credit card and buy his newsletter to learn the name of this secret company. Lucky for you, I did some research and figured out which stock Eric was talking about, and I'll tell you for free in this video. I'll also share some valuable information about the company so you can decide if it's a good investment. Make sure you watch this video all the way to the end so you don't miss any important information. First, we need to back up and understand what this teaser is all about. The headline for this teaser is The 2024 Tech Panic, and in his presentation, Fry talks about how tech and AI stocks are creating a bubble in the stock market, like the bubble created by internet companies during the dot-com crash. If you're not familiar with the dot-com crash, here's the gist. In the early 2000s, the internet was quickly gaining popularity, and millions of internet-based companies were popping up and being listed in the stock market. Investors were extremely bullish on the internet, so they kept dumping money to fund these companies. This caused the stocks to explode and the companies became overvalued, meaning they were priced higher than their true intrinsic value. Eventually, investors realized that many internet companies lacked profitability and weren't good businesses, so they started selling their shares. This mass sell-off crashed the stock market, and millions of people all over the world lost money and their jobs. In the teaser, Fry mentioned that tech stocks took 15 years to get back to their original value. But during these downturns, Fry says it's mostly the middle class that gets hurt while the rich make money. They do this by investing in what Fry calls next-gen stocks. While tech stocks were crashing and dot-com companies were shutting down, next-gen stocks were growing and creating jobs. Fry claims that the U.S. government is already spending over 20% of its budget on the next-gen sector, which he says is now merging with AI to expand its market even more. But what on earth is a next-gen stock? Well, according to Fry, a next-gen stock is simply a stock in the healthcare sector. During the dot-com crash, the healthcare sector held up fairly well because it is typically seen as a bulletproof industry. Unlike tech companies, healthcare businesses aren't as optional. No matter what the stock market does, people still need their medicine and other pharmaceuticals to live their lives. So, demand for these essential goods and services is pretty consistent and predictable. This means healthcare stocks are generally a pretty safe investment. Now let's go through the clues in Eric's presentation to figure out which next-gen stock he's recommending. The first clue is that the company acts as a toll booth in the healthcare sector. This means the company uses a royalty business model. Royalty companies make money by investing in businesses and then earning a percentage of the revenue from their products or services. Royalties can be applied in various industries such as healthcare, technology, and entertainment. For example, in the healthcare industry, a royalty company might provide funding to a pharmaceutical company developing a new drug. In return, the royalty company receives a percentage of the sales once the drug is approved and sold. This way, royalty companies benefit from the success of the products they invest in without having to manage the operations themselves, creating a steady stream of income from multiple sources. The next clue is that the company has already secured the largest royalty portfolio in this sector's history. The last clue is that global investment firms like Morgan Stanley own 46 million shares of this company, with Vanguard and BlackRock also making significant investments. So based on these clues, I think Eric's talking about Royalty Pharma, ticker symbol RPRX. Royalty Pharma is a company that specializes in acquiring biopharmaceutical royalties. They provide funding to pharmaceutical and biotechnology companies, helping them develop and bring new drugs to market. In return, Royalty Pharma receives a percentage of the sales from these drugs once they are sold. This business model allows them to generate income from a diverse portfolio of medical treatments without directly engaging in the production or marketing of the drugs. For investors, this means gaining exposure to the pharmaceutical industry's growth potential through a unique investment approach. But not everything is sunshine and rainbows. There are also some serious downsides to investing in Royalty Pharma. Let's go over them. Financially, the company faces potential risks from high levels of debt, which could impact its financial stability. Earnings can be volatile due to market fluctuations and operational factors. Product risks include uncertainty in their drug pipeline, as the success of future royalties depends on the approval and commercial success of new drugs. Additionally, upcoming patent expirations could lead to increased generic competition, affecting revenue from existing drugs. Lastly, Royalty Pharma's revenue is tied to the broader healthcare sector, which can be influenced by regulatory changes and economic conditions, adding an element of uncertainty for investors. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.